Hey guys, Saturday, October 12th, 2024. Let's see what the dollar is doing in regards to Elliott wave theory. So without any further delay, let's get into it. I did a video yesterday on spectrum cycle analysis. As far as we could tell, the weekly cycle just hit a trough using 20 years worth of data. It may play out, it may not, but just for you to know, if you trade currencies, the daily, I've been looking at some other things. It could be 50-50. It could be wrong. There could be more downside. But what's fascinating here is that the Elliott wave theory is indicating something else. So they are not in sync, as always with trading. Things just don't line up together. So you always have to make even harder choices. But never forgetting to factor in risk and manage your risk. So without any further delay, I'm going to show you what I'm seeing with the Elliott wave and kind of see, and this is just, pieces of the puzzle. This is not the whole big picture. Once we get all these pieces together, you create a kind of formula or a chart where you'll look to see if this makes any sense, even if it's worth trading, or just kind of be on the sidelines and just watch to see how this all develops. So, and mind you, I'm a little stuffy. I'm back in town, so my nose is a little getting weird here with the allergies in Nashville. So without any further delay, let's get into it. So you can see right here, this 114 of price action. September 30th of 2022, that was our wave 5, and this is a weekly chart. So we got a wave 5, 1, 2, we did 3, 4, 5, ABC, ABC, ABC. And then here's a little different. We got 1, 2, we just did a 3. And just in case this was at a 3, there's a 99 there, but the program is indicating that there's a wave 3. And then we're working on a wave 4. Wave 4 projection targets are 103.03 all the way to 103.79. So these are your two wave 4 possible projection targets. And then, obviously, a wave 5 down. Since this is a weekly, it's indicating a possible of $93.30 for a wave 5. I think that's it. So we are getting close to a wave 4, maybe a little more, and then eventually a wave 5. I have a target of 98. Somewhere around here. It's in this ballpark. But for the weekly, it's indicating a little more low, which is very possible. Now let's go. Before I do that, this green line right here, this is the seasonality on average. And it's kind of indicating that normally we typically go up to somewhere around November. And then down into, I guess, January, and then a nice little rally to like February of next year. So seasonality is up, but depending on what are you looking at and what I guess the settings and the algorithms. There's two views. I've seen another view where November and December start getting weak. So I'm still, researching that, but it's just good to know that it could go either way, between November and December. Let's go to the daily chart. And the daily chart is a little more interesting. I'm going to show you a few things. So we got a wave 5 here of April 16th of 2024. We got a 1, 2. We just made a 3, and we are working on a 4, or maybe have a 4 already. You see these little lines right here? It's indicating that The only way this count will be void from a wave 4 is that we have a close above 103.84. You can see the seasonality wise, it dips around the 15th and then it continues rally all the way to November 22nd. In regards to seasonality. So if we get a close above 103.82, that means, and we continue grinding higher, that means that this count is going to change to something different. But if we fail around here, I mean, we already took out this one right here, 102.66. If we could close above 103 or fail here or below these X's, chances are we have our wave 4. So let's say there is a wave 4 in the works. Possible target for ending wave 5 would be 99, close to my 98. And there's another extreme, which is 97. So somewhere in this ballpark, we'll end a wave 5. So this could be potentially a dead cat bounce according to the Elliott wave theory. And I know the Elliott wave theory is subjective. So I know some of you have different counts. So let's assume that this count is correct or it's in the ballpark. There's one more leg that we're waiting for wave 5 to end and then maybe rally from there. And I've always been leaning on that. The Elliott wave is confirming it even more. Even though the weekly cycles has just bottomed here, I'm going to show you some other things that I've seen in the past that for some reason the dollar shows patterns or characteristics of it. I'm going to show you this clip here, or not a clip, but like a snapshot. So you can see right here on February 23 of 2004, the weekly cycle bottom, and we were somewhere around here. Kind of reminds me of the price action we got. And mind you, this is 2004. So you say you get this nice little pop, and then you get this slam dunk while the cycles, the weekly cycles are going up. And then you see when it hits a peak here, you kind of hit a peak here. So there's evidence that even though the weekly cycles are just hit a trough and about to go up, price action has a habit that it could, or tendency, to turn on a dime and go against the weekly cycle. So this is your example 1 in the past. So let's say this is your 3, wave 3. This is your wave 4. Your wave 5, 98, 99. That's where I'm looking at. Happen around here. Same setup. We're going up, wave 4, head fake, down while the cycles are going up, finish on a wave 5, and then. So that's example 1 on that one. Let's go to example 2. Here's a July 30th, 2007 trough low. You can see that the dollar, mind you, this was a downward price action, spiked here or turned. Same thing we're doing right here. This is a little more defined. But then eventually it continues going down while the cycles are going up. But then reverses, so it looks like a price action stalled, rallied really strong, and then lined up with the cycle on the top. So this is example number 2 of when the weekly cycles go up. The dollar has a tendency to snap and push even lower and then snap back up. Very volatile move. And this is the 2007 price action. So if that happens with our price action here, it won't surprise me because Elliott wave is telling us a wave 5 is still in the horizon. Example number 3. Here's the 2007 trough cycle low. And you can see that we got this nice rally, which it looks like this is playing out right here. And then a slam down. So this has happened already 3 times as of now. And then you get this rally and then kind of sideways. And here it worked. So when this cycle hit a trough, this one worked and it was in sync. There was no head fake or a bull trap set up. Let's look at another example. 2017. Pullback. This one is probably not as extreme as these, going really way out of the cycle. But you can see that when it hits the trough, you get this violent move down, and it wasn't as bad, but then resumes, and then it overextended itself, and then it came down. So this one is kind of like in the gray area, but it did happen that the violent move came, or the move to the downside continued. I think this is the last one. And this is where we're at right now, where we have our low and the cycles are now going up, and we are in a wave 4 working to do a wave 5 somewhere in this ballpark. So can we get these patterns again? Very possible. So you have to factor these little things in just in case there's more, leg to the downside. And what would confirm that? Price action, because price action is king. You have to look at lower lows and lower highs in order to see that this is probably playing out. So when you see that playing out, you should be even more alert and probably focus in on this area. Because whatever's going to happen, whatever the event, whatever is the trigger that gets everybody out of the dollar, and I'm assuming gold is probably going to continue rocketing higher. I don't know if it's a war. I don't know. What could it be? But we're living in interesting times. So whatever it is, whatever decision, whatever report, whatever comes out, whatever the BRICS nations do, I don't know. You get this flush to the downside, you got to be vigilant and ready. Because we're getting close to, according to, in my opinion, my analysis, not trading advice, but what I'm seeing, a possible wave 5, then to turn. So let's look at the daily chart. So we're on a wave 3 here, working on a 4. And like I said, we'll get void if we close above 103.79, meaning that this thing wants to trend higher. There's some resistance at 103.79, and we're kind of chopping around here. So possible wave 5, 99, which is close to 98, all the way to 97. So this is the ballpark. So you could probably put a trend line, and if that breaks it, maybe you could place a trade and put your stop right at this high. Just an example. Let's look at some other things here. So we broke this linear regression channel, and we're trending up. Keep an eye out for 1016. Volatility is going to increase. Give it to, give it a day before and a day after, depending on where this lands. But keep an eye on the 14, you can say 15, 16, and 17. Volatility is going to get interesting. Looks like we hit our target with the ellipse. Wave 4 breached this line right here. And if it's going to push higher, these are your next targets that I'll be watching. 105 all the way to, yeah, pretty much 106 to 105, which lines up with this area right here of resistance. So the dollar could continue chucking along. Yeah, getting close to, you know, violating some Elliott wave theory, but that's why it's keeping us in check here. If you go above here, things are gonna change. Dark targets to the downside is 99, pretty much 99, which lines up with this wave 5 here. Is there anything else? I think that's it. So I just wanted to show you that not everything lines up. You got cycles that are positive, but however, there is some patterns that the dollar does on the weekly chart. You can look at the daily chart. I just didn't want to make this video too long. But on the daily chart, you can pick out some of these patterns where the cycles are up and you get this high volatility volume to the downside and opposite of the cycles. And then it, you know, snaps back up and continues, you know, going and following the cycles. And mind you, you see that seasonality wise, it peaks around November. And then it pulls back somewhere around January, and then it resumes. So, you know, Christmas rally and all that, but who knows with all the stuff going on in this world, how this is going to play out. But this is typically what it does. And I've seen other charts where November and December are weak. So you can kind of get this last dead cat bounce. And then that means that once this goes, the euros and the pound and all these other currencies could rally from November to December, and even gold. So those are my thoughts. That's my analysis. We'll continue. I'm just doing a little series here because it helps me with my analysis. And I'm sure it'll help you, at least seeing somebody else's view of what's going on. We'll look at other stuff, Gann theory and all that other stuff. So I'm going to sign out. Hope you like this video, and I'll keep you posted on my thoughts on the US dollar.